Silver, I mean, silver's obviously tight in London, but it's also becoming tight in Shanghai. This is a global phenomena. This is not, oh, there's plenty of silver, but it's in the wrong place. No, there's not plenty of silver. And what I'm watching as far as COMEX is concerned, November is strictly a non-delivery month, and the amount of contracts being added on a daily basis for November delivery is astounding. December, on the other hand, is a big delivery month. This is a short-term event because the supply is already, the supply of junk being sold is already starting to dry up. Junk silver is going to become the most expensive form of silver in the United States, even priced higher than eagles.
Analyst Bill Holter highlights a growing stress point developing across the global silver market. He explains that shortages are no longer limited to one region. Tightness in London has now been joined by tightening inventories in Shanghai, signaling a worldwide supply squeeze rather than a simple distribution issue. COMEX activity is also raising red flags. Despite November being a non-delivery month, contracts for delivery are increasing rapidly, indicating strong demand at a time when available supply is dwindling. With December set to be a significant delivery period, the pressure could intensify quickly. Holter also notes a shift within the retail market. Junk silver is drying up fast and may soon become the most expensive silver product in the US, even exceeding eagles. If you found this helpful, don't forget to like and subscribe.
Well, I mean, the payback in gold is obviously greater than the payback in silver. So gold is going to be the target. And I would say either generic rounds or bars are going to be the easiest to, they'll be the easiest to counterfeit. I mean, it's more difficult to counterfeit an elaborate coin, but yeah, they can be counterfeited. And that brings me to a topic I want to talk about. In silver, I've been an advocate of junk silver as the best form to own in the United States. Roughly 14 dimes equals an ounce. So you've got 14 transactions. It's the smallest denomination. It's U.S. mint lineage. It really can't be counterfeited because it's got to show scruffiness. I mean, these were in people's pockets. And we've got an anomaly going on right now where if you're looking to sell junk silver, you're looking at $3.50, $4 under spot. And if you're looking to buy junk silver, you can buy it at spot, maybe 50 cents over spot. It's the cheapest form that you can buy right now. So if you're buying silver, you definitely want to buy junk silver. It's the cheapest and it's the best. And if you're worried because the bid is below spot, and it's well below spot, pretty much everything else is very close to spot or even eagles are above spot, understand what has happened. We finally got back to this $50 level and we stayed here. We've been here for, call it a month, but we're approaching it. And literally, I'm not going to say the only form or the only way to buy silver in the late 1970s, early 1980s was junk, but that was by far and away the primary form of silver to buy. So what you've seen over the last few months is that many of these people who have held on for 40 plus years have turned seller, and the dealers and the wholesalers got overwhelmed with the selling. So what did they do? They lowered the price. And if they're, call it $4 under spot, that's 8% below spot. And what they're doing is they're sending those coins into refiners to melt them down. And they pick up that 8% is what they're doing. Now, that said, this is a short-term event because the supply is already, the supply of junk being sold is already starting to dry up. And when it does dry up, and prices start to normalize, guess what? There's way less junk available that still exists because it's been melted down. And I'm gonna say right here that I think when all is said and done, junk silver is going to become the most expensive form of silver in the United States, even priced higher than eagles. And I say this because I believe the supply is being destroyed on a daily basis. It's being melted down. Yeah, there's a backlog. I mean, the amount of junk that has been turned in for sale has been huge, and it has backlogged to refiners. This will pass, and when it does pass, I think, like I said, I think junk will end up being the highest priced silver. Right. And I think at the peak, American Eagles were $17, $18 over spot, and junk was as high as $13 over spot. And at the time, The premium on bars really didn't move much. I mean, I think 100-ounce bars maybe were $3 over spot, and that's pretty close to where they are now. The bar market has not moved much, but yeah, junk has had the premium has collapsed and gone negative, and I think it's a no-brainer to buy junk silver right here. I'm watching silver in particular, COMEX silver. Also, we're seeing now that silver's obviously tight in London, but it's also becoming tight in Shanghai. This is a global phenomenon. This is not, oh, there's plenty of silver, but it's in the wrong place. No, there's not plenty of silver. And what I'm watching as far as COMEX is concerned, November is strictly a non-delivery month, and the amount of contracts being added on a daily basis for November delivery is astounding. December, on the other hand, is a big delivery month. And I question, can they deliver 60, 70, 100 million ounces for the month of December? I don't know. It just looks to me like the failure to deliver, we're walking on a knife's edge at this point.
Bill Holter explains why the most overlooked part of the silver market, junk silver, is becoming one of the most important indicators of stress. He notes that while gold may offer the larger payoff, silver presents a unique advantage through U.S. minted constitutional coins that are nearly impossible to counterfeit and historically used during previous silver booms. An unusual dynamic has emerged. Junk silver is selling below spot while being bought near spot, a disconnect caused by decades-long holders finally liquidating and refiners melting these coins for an 8% spread. However, that supply is already dwindling, and Holter warns that once it disappears, junk silver could become the most expensive form of silver in the U.S. With tightening supplies in London and Shanghai, the market is approaching a critical juncture. Let's get into the interview.
The paper markets were the tail on the dog, but the tail constantly wagged the dog because they would overwhelm the physical markets with paper. The problem now is they've done it for so long and to such a grand extent that now there's a question whether these paper contracts are going to be able to deliver. And the answer, I think you're going to find in the next month to 3 months, we're going to find out that no, the paper markets are not a substitute for real physical because they have to deliver real physical that does not exist. The market is, the bottom line is all of the futures, options, paper products, etc., they're all based off of the physical metal in the first place anyway. That's why they're called derivatives. They're derivatives of the actual product. There's not as much concern. There's concern. If gold doesn't deliver, the system dies anyway. But if gold doesn't deliver, it's not a direct effect on production, if you will. Silver is used in so many different applications, whether it be industrial, technological, medicinal. I just did an interview and was talking about every time they shoot a Tomahawk missile, there goes a monster box. You can't make a Tomahawk missile without roughly 500 ounces of silver. So silver will have profound ramifications to the real world, to the real economy. Now, that said, if silver goes failure to deliver, or gold goes failure to deliver, you're stuck in the casino because the casino will close. And when the casino closes, and we've talked about this, for the last, year and a half, maybe even 2 years, we've talked about the great taking. Once the casino closes and banks and brokers and insurance companies start going belly up, they're going to take your capital with them. And that's why it's so important to get your capital out of the system into something gold and silver that cannot bankrupt, and in a place where it can't be taken from you. There's always some risk. I think the risk will be greater as the prices go higher. And I would simply say, either call me or call you. We clear our business through Miles Franklin, and Miles Franklin's been in business over 30 years and never had, they have never delivered a counterfeit coin. As far as I know, has never delivered one counterfeit coin to a customer. And if it was done, it was rectified. But understand that if you go through a reputable broker, their business is done. If they send you a counterfeit gold eagle or gold bar or silver or whatever, if they send counterfeit to you, their business is done, because then their reputation, their word is broken. So I would just say, and do understand that anytime metal is shipped out, it's done 100% under camera, and the coins that they receive, other than coins directly from the U.S. Mint, it's my understanding that all coins are assayed and proven to be real when they come in before they go back out. So if you use a reputable dealer, use us, Miles Franklin, you're going to get the real deal.
As Bill Holter warns, the entire foundation of the paper metals market is approaching a moment of truth. After years of overwhelming real demand with paper contracts, the system is finally colliding with the limits of physical supply. Silver, unlike gold, isn't just a monetary metal. It's essential to technology, medicine, defense systems, and industrial production. A failure to deliver in silver wouldn't just break the financial system, it would disrupt real-world supply chains. That's why he stresses the urgency of moving capital out of vulnerable institutions and into tangible assets that can't be frozen, rehypothecated, or seized. In an environment where counterfeits circulate and trust is eroded, working with reputable dealers becomes crucial. When the system breaks, only real metal will matter. If you found this analysis valuable, don't forget to like the video and subscribe for more.